Good morning. Okay. So back up here again. And one of the concepts about the method that we use is the void, which is simply says there's no support or resistance or very little support or resistance to the left. So as this topping pattern began to form, and I got this squeezed together so we can see what's to the left over here. It doesn't matter anymore, but just for the conversation, just to show this accelerated move and how prices went up here, it left some reference points. But while there were a few reference points here, the sideways correction moves prices away from them. And then there was the accelerated move here, indicating the end of this move higher. So from there, we know what happened last week. And prices fell sharply. So when prices fall as sharply as they have last week, they create a void up above. And this becomes what I call the weakest link in a move down. And the reason for that is, well, whether prices move up or move down, when they move sharply with this kind of momentum, talking about it from the point of to the downside, they have to create resistance. In other words, more sellers have to come in, creating a level which could be a base. It might be a pivot and a double top. It could be another M top. We don't know how exactly it's going to form. All right. So when prices recover as they did yesterday, and it wasn't unexpected that they wouldn't attempt to recover down here because they came down to the pivot low and they fell very far. So it's possible that the Federal Reserve felt the danger of the markets going lower yesterday. So whereas when they had reached resistance and started to roll over, they came out in a very timely manner and said, oh, we're going to be buying corporate bonds and we're going to be adding more liquidity to the system. And so the markets then took off from there. And as that began to happen and they cleared this resistance area, there's nothing to stop them from going up. So now we see, and I marked these wide range bars here. You see that if prices as they fall sharply and form wide range bars, one of our candlestick concepts, there's a tendency for prices to stall in the momentum. So it's something to keep an eye on. So we've got a wide range bar here. This has been advancing. You can see over here yesterday when the wide range bar formed and prices began to roll over. This is when the news came out and then prices drove higher. A wide range bar, minor pullback. And this is the biggest wide range bar in the advance that started yesterday. So as prices now are getting closer to where they fell from, this upward momentum should stall. How much does it stall is the unknown. Can it push up into it? Yes. Can it get deeply into it? Yes. Right. But now it is retraced deeply into this red bar. So the markets, so to speak, have sidestepped a very dangerous situation as far as correcting further. Are they totally out of the woods? No, because as it comes up here, remember this all fell based on this coronavirus, a better word, I don't know, scare tactics that are being used, re-emerging, and the markets fell, and the Federal Reserve chair coming out and saying, oh, things are going to be bad, we're not going to raise interest rates for a very long time. Well, what he did yesterday, coming out and I guess defending what he said and reversing it around, I don't see that much changes things other than to say we are artificially going to support the markets. And I guess the markets feel safe and happy with that they're doing that. So this is a big blast to the downside that has to be respected. This could become an M top. We shouldn't just suspect that this is going to push up to new all-time highs. And when we see something come down as sharply as this has, it needs to be respected. Same thing, retesting a topping tail pattern or a breakout failure. We'll just see how far it gets into it and what the reaction is there. As you can see on the smaller time frames, momentum is beginning to stall right here. So as we always do, we look at reference points of support and resistance to the left. And when prices reach those locations, we see what the reactions are to those locations, meaning new patterns begin to form. So looking at the weekly chart, and it's only Tuesday, right? Should this end like this, it'll be quite positive that prices were able to penetrate into this bearish reversal bar and hold on to their gain. So by the Friday afternoon, we'll see what this looks like, whether if it's a topping tail, whether it's a bigger green bar, so the depth of retracement into a red bar, if it is that deep, will negate the implications of this bearish reversal. So this is part of bar by bar analysis and keeping us objective about what is. And bar by bar analysis, in the way I've explained it to you, is explaining retracements. So voids, bar by bar analysis, retracements, reactions to resistance, all of this tells us what's happening on a moment-to-moment basis. And then as prices reach various reference points, it says, okay, turns are beginning to happen here. Prices move up deeply. They enter a void. Red bar is ignored. All of this tells us on an ongoing basis what's happening within the markets. Someone's asking me on YouTube, disaster rule to manage a gap past a stop, 50% above and 5 minute. Wow. 50% above. I'm having a hard time following that, Anonymous. Look, if you're getting a disaster gap against a position, 5 minute rule, right? So if you're short and it gaps up and it takes out the 5 minute high, you got a decision to make, right? Get out. If you're going to use 30 minutes and it takes that out, decision make, get out. What you're writing there is kind of overcomplicated. I'm just not understanding it. Trader McGresson, I don't think Greg worries about volume. I don't worry about volume, Trader. You can even make the case that weak hands got out, selling climb, blah, blah, blah. I don't care about volume. I don't even have volume on the charts here. As long as the instrument that I'm trading trades adequate volume, I really don't need to watch the volume. And if I do have volume on a chart, the only thing that's going to catch my eye is a big volume spike. And so 2 ways of interpreting that. A big volume spike with range contraction, which says, why is that contracting? If it's going up and now the range contracted and there's a big volume spike, there were large change of hands and likely, well, we know momentum stalled just by the price. But it would be a heads up. If prices are spiking higher and I see a large volume spike, I take note of it. So in either case, volume is nothing more than something to say, that's interesting. It's interesting. And now when I'm looking at price, maybe that's a little bit more interesting, but it's nothing that's going to tell me act in the moment. The only thing that tells me to act in the moment is price. Volume is secondary. Some make a big deal about volume, and its interpretation, and, maybe leads to some interesting conversations, but rarely does it lead to placing a trade. All right, let's continue. Okay, so NASDAQ, Also, depth of retracement into the red bar. Again, patterns like this often turn into M tops. It's had a big run. The momentum move that we typically look for in an M top isn't so much of a climactic type of move here, but it did begin to accelerate. So it's something to keep in mind. This chart right here, don't take it for granted that these wrong way option traders got this excited and that just discount or dismiss this retracement. It's being manipulated by the Fed. So, you know, this will come up today as this goes up. It came down real hard. So we'll see what unfolds over the next day or so. I'm saying this isn't something that should be dismissed. You know, obviously, like I said, the Fed is playing games with historically what happens here. So kind of throws a monkey wrench into what typically happens over decades of time. But just looking at the way this came down, the size of that bar, the angle that it came down at, it shouldn't be discounted. Josh, if you're trying to get me to dismiss you with that Fibonacci stuff, you're going to get it. And we'll let that slide for now. All right. Dow got back above the 200. Right, that's a big plus. Whipped down below, got back above. It's retracing back up into the big red bar. So far, more than 50%. That's a good thing. So it's 9:14. If at 4 o'clock this looks like this or further in, okay, bulls held on to it. If at 4 o'clock this looks like a topping tail bar, the party hats are going to come off. So let's see what happens. You know, it's the same story here. You know, big sharp drop, angle coming down real hard. It's got a void. So we got to respect the fact that there's really nothing to stop this from going up. But it's a big bar. It's a big bar there. It's been going, you know, as it moved up there was the little pullback and so on. So same story going on here, you know, in the smaller time frames, beginning to pull back. So this climactic move, look at the size of the bars on the 5. Now it's pulling back. So the same way this, let me just use the term, got out of hand on the upside because of this void, this move down could get out of hand too, because there's nothing to stop it from going down. So buyers have to step up and create new demand where there's nothing to trade against. So pretty powerful concepts that are part of master trader technical strategies. Same story, Russell coming back up. Now it's into the 200. It does have some actual price resistance there, but the same wide range bar. Bonds coming back down. We knew that they were coming into a sell zone area yesterday. So now they've rolled over. Oil, bit of a recovery, right? We spoke about this yesterday, that oil being into this unfilled gap, having this move down. If the markets were going to continue to be weak, odds are oil would be weak, and they held. Right? And they're up in some resistance here. And gold. And I said in the room yesterday, I says, interesting, gold hasn't, you know, moved more than it has, but if this can stay up here, even if gold stays up here and the market does retrace back up to the old high, I think by next week it'll break out above the highs here. You can see there's a little bit of selling going on here at the moment. And silver holding up okay. We got this head and shoulders top, keeping an eye on that to see what happens here. Stops in your price. Maybe there's a way to calculate. I don't know, Adam. If you're talking to Dan, I guess you're talking to Dan, what he just posted. Okay. I'll just post this in YouTube in case anybody is doing this trade. I don't think you guys on YouTube are doing this trade. Dan posted this yesterday. I have to break it up. Okay, and the last thing we're going to look at is the transports, as we always do. And they had their reversal day. So everything yesterday, was the technical buying off of support. And then the Fed came in, and just as the markets were rolling, trying to roll, right? We had the one short I did in one, and Alex in the room, this one short on the Russell, and the other E-minis didn't move. I was like, this is not good. And when the Russell turned around, and then as they did try to turn, if you guys remember in the room, the NASDAQ futures made a little M top and tried to turn down, and the Fed came out with the news absolutely catching short sellers. And the Fed is not your friend in this market environment. I guess if you're long, you're want to give Mr. Powell a kiss, but if you're picking the short side at turning point times with his timing, obviously he's trying to use those short sellers as something to drive the market up. So whatever banter goes on between the president not liking him and what he's doing, I think he's absolutely doing the president's work very well. And Mr. Trump should be very happy with his performance and timing. All yours, Dan.
Yeah, I totally agree. And yeah, Stephanie Palmboy was on. I like her, and she was saying, yeah, the timing was just ridiculous. And then some other people were on CNBC and Stephanie, and they were both saying, just as an example of putting stuff in the people's face because they're puppets, and they were all saying, look, not a whole lot of new news came out of what was already announced about the bond buying, other than, buying some individual bonds because there's not enough liquidity in the ETFs. And I think it was just totally orchestrated, exactly what you're saying right now. I think it's BS myself. I guess they just toy with the market instead of letting natural forces dictate supply and demand on prices on things. But nothing you and I are going to do to change it. Oh, we did an excellent job yesterday switching from all of our bear call. We had 10 open bear call credit spreads yesterday, or maybe 8, I forget. Closed them all at profits, and then we put on 6 bull put credit spreads. We were finding compelling setups all over the place. I got us into 6 of them. I had a list for a number 10 to do today, and the stupid gap is messing it up. So I don't like gaps because, big gaps for new opportunity, unless I might, fade them. You got a gift if you're the beneficiary. So I've been going through pre-market. I'm tightening stops on things here, and I'm kind of picking pivots here on the 15-minute chart that I don't want it to come under, because then that would be negating the big old gap. I'm filling it and exceeding it. So beyond, we have a put spread, a coup, beautiful put spread. Look at that, wide range bar from consolidation, a D-Dog, put spread, DXCM, just beautiful, no brainer. Reverse head and shoulders here, left shoulder head, right shoulder, wide range igniting, buy setup on the weekly. Just no brainer trades here. The video did a put spread and did a put spread on spiders. I said let's cover half 5-minute low, half 30-minute low. We have a put spread that expires tomorrow. And there's nothing wrong with letting it expire. It's way the heck down here, 298. But, closing it out, it should only be pennies. And then we're done with it. on to the next setup. All right, let's do swing here real quick because we're long and short, but more long. AKR, long stock, little Clausen here we found yesterday. Beautiful breakout daily, weekly. FSLY came from one of you all. Beautiful, beautiful. So I moved the stop under this bar. See, some people like, hey, where did you get that number, Dan? And as I explained, beautiful gap up. I don't want it to negate the gap and then take out this major bar. So there's a couple of YouTubes. Let me finish these. I think J&J, we shorted the bear 1, 2, 3, gapping against us, but our stop is over the big red bar. Nothing to do for now, except possibly legging into a covered put. Momo here, we shorted the breakdown yesterday, daily, weekly. NET, long stock yesterday. Nikola, we actually did a very interesting trade on this yesterday. We did a 40-35 July put, took in $3.50 a share. Never in my trading life have I seen such a juicy midpoint for so far out of the money. Pfizer, we still have a third lot left. I was short. Piton, I set an alert. Yeah, Piton's relative weakness. It's beautiful, reverse head and shoulders, just beautiful. And David, I don't know if you're in the room here, but do you remember our analysis here about it showing relative weakness after a deep retracement? And that's when I said I would hold off for that. This was not rallying when the market was ripping. And so now it's weak again here today. Well, all right, so dilution 619. I mean, whatever. I mean, we're chart readers. I mean, if they're aware of it now, Joey, it's still priced in, right? Right? If you know about it, unless you have inside information, then the market should do that. All right. So anyway, on Piton here, I sent out an alert saying 5-minute low. We're going to leg into a covered call because it's weak. And finally, Varex, we shorted the breakdown, so no adjustments necessary. So all our opens are okay. Let's see. Bill on YouTube's asking me, covered call order rejected. Well, one of two things. It should take your order pre-market. It just doesn't become live until the market opens, but you still need to wait for the 5-minute low anyway. So you don't know what the 5-minute low is. So I would hold off. Secondly, let's say hypothetically you only are long 80 shares of it and you're trying to sell one call, which represents 100 shares of the underlying, and your account is not approved for short sales, that would give you an order rejected, because then you're unbalanced. You're short, you're partially short a naked call. And so I discovered that somebody in our trading room, actually, because we had to investigate it. Why is it being rejected? We figured it out together. So if you're unbalanced. Someone's asking about Zoom, our bias, bullish. Well, let me slow down. That was a very bullish close yesterday, negating these two topping tails in a red bar. So that's a continuation pattern. What I don't like is the gap up greater than 100% retracement, taking out this pivot. So right now, I would say I'm 100% neutral on it. And it's at all-time highs. I don't know. I don't like the gap and crap here pre-market, so it would be a stay away for me. But the point I was going to make on Piton as well as Zoom, and I heard somebody else say on Netflix turned red. People like to label stocks. And, they're calling these the stay-at-home stocks, which have kind of having a little bit of opposite trading bias to the broader markets. So since the Dow was up 1,000 earlier, that's pricing in a favorable economy. I know over in Europe, there's some talk about a virus thing working. I heard Kramer on TV saying that we're treating the wrong part of the body, trying to figure out the virus, that whatever they did over there is not treating the lungs. But whatever. Kramer was also making fun of these beat up stocks. So, and he was funny. He's like, hey, what do you want me to take up? You want me to take up the hotels, the cruise lines, he in essence was making fun of the junk stocks moving so aggressively. And I've noticed that also pre-market. Play, we had NCLH as a pending long. It just barely did not trigger yesterday. It was over Friday's high, so we're not getting the benefit of this huge 10% plus gap up, unfortunately. I also had SAVE, SAVE on the list, and that's a big old gap. So cruise lines and airlines are in play again today. Jets was on my list to sell a put and just barely didn't trigger. So those are three nice gaps that we didn't get into yesterday. That's why you pull them McGraw. Ed, Momo, no, we're in Momo. But Ed, you must do yourself a favor and do not enter a trade unless you understand the setup, the stop, proper positioning size. So it scares me when you're asking me about stops on things you're already in. So no, it's an open short. It's gapping against us with the broader market, but it's fine. There's no disaster on our hands here. Sebastian, your drop down, if you'll change it to all panels and attendees. Yeah, we got a put spread on the video. Crowd, this would have been a beautiful put spread yesterday. Bullish engulfing, uptrend. XOP oil, I mentioned into the close yesterday, it's a good put spread. But I'm noticing though a lot of these, pre-market euphoria, and you all know I use my pre-market chart very, very reliably when I'm looking at new gap trades. And because I want the pre-market action to support the pattern when the bell opens. Yeah, Boeing was on my list as a put spread yesterday, and now the gap's too excessive. But I am with this big old gap, I am not bullish here. You heard me say yesterday when we got that little pop, you heard me very clearly say I am bullish for the next few hours to few days.